What's up, everyone? It's Caddy with Money Vesting. So Alibaba stock here pushing up over 10%, back over $95 per share on the news, on the catalyst that was just released a few, I think, hours ago, that Alibaba is going to be splitting into 6 different companies that are all going to be public, and they are going to be doing their IPOs for each of those 6 companies. So as always, if you guys enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below. There is a 16% annual discount that you can take advantage of till the end of this month. So link's going to be down below to take advantage of the buy and sell alerts, options alerts, trade ideas, all that stuff is going to be included. So this is what Alibaba looks like pre-market, pushing up over 10%, or trading back over $95. What the funny thing is that I actually had a trade idea on Alibaba, but it actually didn't work out as planned. This right here was at support. So this green rectangle was that area of support that we were watching for Alibaba. It kind of dipped below that level down to 79, close to $80, and then just absolutely ripped from that level from 79, $80. It is now up a nice 20% already from those levels. But this right here was the catalyst. So Alibaba just split into 6 units and explore IPOs. The shares popped 9%. So Alibaba said Tuesday it will split its company into 6 business groups, each with the ability to raise outside funding and go public in the most significant reorganizations in the Chinese e-commerce giant's history. And each business group will be managed by its own CEO and board of directors. And Alibaba said in a statement that the move is, quote, designed to unlock shareholder value and foster market competitiveness. So we obviously know Alibaba has been under tremendous amounts of pressure. We know that, ever since Jack Ma was very outspoken about the tech landscape over in China, the CCP did not, receive that well. And ever since, there's been a lot of tech crackdowns, regulatory issues, a lot of fines, a lot of oversight from the CCP. And as a result, not only Alibaba, but of course the entire Chinese sector, Chinese e-commerce and technology sector has been under a lot of pressure, right? So if you come over to Chinese stocks, they've almost all been selling off, including Tencent, Baidu, Alibaba, of course. We've got, NetEase and some of the other EV companies as well that have been under a lot of pressure. So Alibaba at one point was down a little bit over 81%, or pretty much, wiped off close to $600 billion in market value. Since then, it has seen some decent rallies, about 100, 109, 110%. And right now it's pushing right back up, I think. But this is also going to be, kind of like a fresh new organization for the company. It's going to be a good move for shareholders. And these are some of the strategic priorities where they are going to be splitting these businesses into. So we got Cloud Intelligence Group. So again, similar to Amazon, Alibaba also has its own cloud business. We've got the Tmall Commerce Group. I've never been able to pronounce that word. I just don't know how to pronounce it. Let me see if I can get it with speech. Probably not. But this will cover the company's online shopping platforms, including that word and Tmall. Then we got Local Services Group. So Yung Yongfu will be the CEO, and the business will cover Alibaba's food delivery service and L.me, as well as its mapping. And CEO Daniel Zhang is going to stay on board with the cloud services business. Then we've got, again, another word that's going to be way out of my pay grade, Smart Logistics. Wen Lin will continue as CEO of this business, which will house Alibaba's logistics services. Then we got Global Digital Commerce Group. Jiang Fan will serve as the CEO. And then finally, we got Digital Media and Entertainment Group. Fan Luan will be the CEO of the unit, which will include Alibaba's streaming and movie business. It's quite well put together. Like, they've already got people that are going to be acting CEOs for these. That pretty much goes to show that, this was planned out well in advance. And I think they're very much moving forward with this, right? There's no potential or probability, but instead it is happening. And of course, we're going to get some more details as weeks go by as what's going to happen with the existing Alibaba shares, right? So my consensus, or my most likely expectation, would be that Alibaba's existing shares will pretty much get turned into the cloud business, and the other 5 will spin off as their own separate IPOs. And when they actually do go public, the existing Alibaba shareholders in the actual BABA stock will just have that split accordingly into other IPOs as well. So pretty much you'll get, a certain amount of shares for other IPOs as the split actually happens in the other 5 ventures. But this one right here, the Alibaba Group Holdings, my guess is that it's going to be the more cloud oriented, the main cloud business for the company, and the other parts are going to get spun off to the other 5 ventures, and existing shareholders will just get additional shares for what they actually own in their Alibaba stock. So the company sees the creation of 6 businesses as a way to be nimbler. The transformation will empower our business to become more agile, enhance decision making, and enable faster responses to market changes, Zhang said in a statement. And the reorganization also comes at a time when there are signs that Beijing is warming back up to technology businesses, something that I did talk about earlier in the video. And this right here are going to be their 9 months ending in December 31st financials. Now, Alibaba's fiscal year ends in March, starts in April, ends in March. So it's a little bit different than that of the most companies in the US. And they have obviously seen very substantial growth on a year-over-year basis. So if you take a look at China Commerce, which obviously makes a majority of their revenue, 68% of their revenue comes from China Commerce, was flat in the first 9 months of this fiscal year, only down about 1%. Then we got international commerce, which was 8% of their revenue. That was up 8% year over year also. Then we got local customer service, 11% year over year growth, 22% year over year growth for local consumer services, and cloud, which does make a pretty small amount of their overall revenue, 9%, but it's also one of the higher margin businesses for the company, right? Similar to what we see for Amazon, even though AWS is not as big as e-commerce, it is what drives profitability for Amazon. So Alibaba, that was a growth of 5% year over year, but makes up 9% of their overall revenue. And then if you take a look at their diluted earnings per share, again, this is going to be in, I believe, in renminbi. Yep. So this all of it is in RMBs, 18.49 for the first 9 months in 2022, which is a little bit down 35% because their income from operations is lower because of impairment of goodwill, obviously being a pretty substantial so impairment of goodwill being a pretty substantial amount of expense here for the company. So income from operations was 85, and then we got share-based compensation expense 23.2 billion, and we got amortization and impairment of tangible assets at 11 billion. That's an increase of about 25%. So we are seeing a bit of an increase over there. So non-GAAP EBITDA was up 7% to 122 billion. Now, I've already done analysis on the fair value of Alibaba in my previous videos, but if you jump over to what the expected earnings and a future looks like for the company, if you kind of price in, let's say, a 12% growth for the earnings and a 20 times P multiple, which I think Alibaba trades at a little bit of a lower multiple right now. So if you come over to statistics, right now it's trading at a little bit over 50 as it looks like from TradingView, but this is also because their earnings last year absolutely got destroyed. So if you come over to the annual statement, and we're going to go over to income statement here, and we're going to just click on net income, which is going to be a little bit lower. So that's what we're going to do. So net income was a huge decline of 56%. So you can see that we saw that big decline on a year-over-year basis. And the expectation would be for them to once again recalibrate back higher and start pushing back up in terms of net income. Of course, there was a very strong growth in 2019. They did a little bit over 21 billion. In 2020, they did over 22 billion. This right here was a pretty substantial decline for the company in terms of net income at over 9.6 billion. That's why the valuation is a little bit higher. But if you go with a modest 20-25 times earnings multiple with a 12% growth in earnings and account for a 12% discount rate, 10% margin of safety, and only 1% share buyback, we end up with a fair value of $71 per share. And the price right now, obviously trading at $95 per share. These are actually quite conservative estimates. But if you were to go a little bit more aggressive, saying 16% growth for the earnings and trading at a little bit of a higher multiple, say 22, then of course you are pretty much at fair value for Alibaba. So Alibaba, from a fundamental standpoint, again, has been one of the companies that didn't really quite trade at their true potential. It's almost always been trading at a discount for the longest time. So it's good to see that it's finally seeing some momentum back up. And from a technical standpoint, I'll be watching closer to this resistance at $120. So that is going to be that level to watch as a resistance, and support level is going to stay up roughly at around 79, close to $80 per share for Alibaba moving forward. So very nice move to the upside. Again, as more details come out, I will be sharing in our Discord. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.